This is your weekend market recap for Friday, June 10th, 2022. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your weekend market recap for Friday. What is it? The 10th of June, 2022. Let's get into it. Hopefully everyone had a great week. If you've been following, you nailed a lot of entries in some spots. Also finally got a little bit of weakness in some of the things that were long term in that are short. Again, this is a bear market. If you're not familiar with what the heck is going on, you have no clue, you're kind of scratching your head day to day, stop by the Discord room. Link is in the description below. Usually there's one or two things people are doing wrong in this kind of market, and it's usually that they're not trading extremes, or that they're expecting to go higher when it's a bear market. A lot of little things. Again, we're getting into OPEX next week. This is going to be a good video to check out, because again, we're going to zoom out on a few things and just really dump deep into what we need to keep an eye on. Anyway, if you are new to the channel, again, link is in the description below. I appreciate everybody. Tons of great content. Again, side rooms are full of stuff. Everything, recaps are stored there. The education reference articles, recommended reading, volume price analysis, Livermore, the idiot devil's advocate room where people get to drop all of their insecurities. Beat the coin. We've said this for a while. Gotta hold this green area. At this point, it's not bullish or bearish. I mean, again, you break below, it's bearish. You hold it, it's bullish. I mean, it's one of those, again, when you figure out how support resistance works and how to identify the levels that matter, you can really go with it if needed, you know. And again, you're not surprised that when this dumps and bounces back and chops, you know, you're not surprised, because again, it just come down from 8,000. That's how markets work, folks. That is how the markets work. Anyway, let's get into oil. Ooh-wee, what did we say? Everybody's waiting for 125. Everybody. I mean, because again, you can see why on the daily. It was the level that you couldn't close above, but you got above. And if that doesn't make sense, just think of it as a price where you could not close above on the intraday, on a daily basis. So that level becomes of major importance. And what have we said for the last couple weeks? If everybody's expecting oil to go to 150 and their targets are what they are, and now everybody's really just getting super bullish, and they're saying, all right, well, I also think the market's going to weaken, because I think you can sense that with a lot of people on FinTwit and StockTwits, all this stuff. They really think oil's going much higher, but they're all like, well, I'll wait for 125. I have heard that argument a half a dozen times in the last week, where they're just like, hey, 125 is going to be my first target. I don't want to be greedy. I ask you then, what is not greedy already? Keep in mind the action. I know this says zero, but remember we went negative on the futures. Look at this move. We always talk about smooth channels and then blowouts being the top. I mean, this feels very reminiscent of the TLT peaking, actually, because think about what happened, you know, with what's going on in the TLT when we get there. You know, it breaks out of the channel and then has another channel retest, and it's a lower high. Well, with the TLT bottoming, it might be a higher low. Interesting action. Again, I tell people this all the time. I might be early, I might be wrong, but this is how I feel. Getting short oil was a little messy. However, I'm gladly waiting my time. You know, I will drink their milkshake. If you don't know why oil, gas, all this stuff gets absolutely obliterated in a bear market, stick around, because we're going to get into that. All right, TLT. Speaking of channel breakdown, chop. Nice smooth channel with TLT. Break below it. Now you're retesting. Now is it perfect? Exact? No. But what have we said? We said we don't really believe in V tops or V bottoms unless the action is extreme. Well, oil seems to be double topping. Keep in mind, TLT is this double bottoming, because now everybody's expecting higher rates. Now, if you're new to the channel or newer to what's going on, you know, we expected rates to hold here. Didn't. Stopped out, went much lower, kind of gave up on it. If you do remember, and you check the videos from the past and you're around, we did buy this day. Bought around 112. Closed the next day for a nice 4-point gain, something like that. Said this area up here near 120 would probably be a problem. Now we're backing off. Because again, I mean, I love to remind people of this stuff because if you actually watch the old videos, we talk about a lot of these levels, and a lot of people who go, you know, again, you're only as good as your last trade, but a lot of people focus on the fact that I'm weird or whatever, this room is wrong. It's like we might be wrong on things. No one's perfect. We're right on a lot of stuff. And we said, one of the first things we said when this bottomed is, please do not chase it. Let it come back. Let it come back. Now you're down here. We said 112s. What was the low today in the TLT? 112.97. You could have started a position. However, I mean, keep in mind, the FOMC is next week. I have no clue what they're going to do. People are talking about they're going to raise 1%. If they do a 1% rate hike, this TLT is going to rise hard because the market is going to go, oh shit, the Feds have over tightened way too quickly. Recession's coming, deflation's coming, and the bond market's going to do the opposite of what people think. It's going to rally hard. Keep that in mind. Zadala. Again, Hayoti, nice call. We talked about this, you know, back testing this like old channel. Looks like it's going higher. Now people say, well, you said channel breaks before you go higher, but flips direction. This is why we zoom out every day and on the weekends. And if you have a trading platform, please do not only look at one time frame. Look at the monthly. What does this look like? Now we're about to break out. That's the bigger, again, the monthly is more powerful than the daily. So I think we're going higher in the dollar. You're welcome on the VIX. Again, people are just focused on, oh, you're always wrong, Dan. I mean, I'm amazed. They're just, you know, again, people tune you out once you're wrong once. And I sit around and posted something about Steve Cohen and his traders. Like, they literally average 52 to 55% wins. And again, they overtrade. They trade a ton. We do 80, 90% wins, and we trade less. You tell me what seems like a better risk reward and effort. Where are we at? We said watch the mid to lower 20s. I mean, I thought we might hold here, and then the complacency got worse, and we talked about this. If it holds this 23 area, 200-day, and again, look at this blue box. We draw these boxes for a reason, support boxes. This became the next box. Once you couldn't get below it or above it, what happened? Now what happens? I mean, people were DMing me today going, hey, do you think the market's bottomed? Folks, you are not bear market bottoming at 29 on the VIX. I've said this a bazillion times. Please zoom out. You base before the final blow off. You base before a blow off. Again, keep in mind the VIX wasn't as important back then because the SPY was not the leader in the bull market of the 1990s. But you base before you blow out. Now, again, what is the worst case scenario on the VIX? 40s, like upper 40s, please. If we get there, it could be the first spike. I honestly think this COVID spike, I mean, this is a one-off event, right? We're going into a bear market, so it's going to be like this never-ending boom and then blow off. Because, again, the Feds are stuck. If you don't understand why, let's get into it. The SPY. Man, a lot of people see green candles and chop, and they just go, hey, you're a dumbass, Dan. You shouldn't be looking to short, or you should be dumping all your shorts. It's like, well, folks, this is why Dan zooms out. We talked about the 20-month. We talked about this nice, smooth upper channel, breakout, steeper, steeper, steeper. Bear market, inflation causes bear markets. Please don't get it twisted. We said, watch what happens when we get back to the 20-month. Look at that. We said May. Look at that doji. Now here you go, June, lower highs. Oh my God, and the market's going lower. People act like they're surprised, and it's like, no, because you got tunnel vision looking at the daily charts, you don't even realize what the hell is going on. I mean, it's a bear market, and I've said this multiple times that I think like the first major support will be the old channel. It's probably like in the 340s, 350s. And then what? It's probably going to chop, and then it's going to go lower. I mean, it just is what it is. And, you know, pretend if this is the daily chart, people wouldn't care. But since it's the monthly, they just can't wrap their head around a bear market. Now what, right? We said 340s, 350s. Maybe we blow out. You got OPEX next week. You got the Feds speaking. You got a lot of crap going on. So when we zoom out, I mean, it's so messy. So many old trend lines. So many old trend lines. I mean, your guess is as good as mine. Just VIX is going to spike. The market's going to get crapped on. I mean, if you do say the 340s, 350s, apologize for the messiness. Trying to like get it perfect. You can see where our next support zone is going to be. It'll probably be in this area. Okay, well, how are you just picking this area, Dan? Well, hold on. Let's zoom out. Let me remove this bubble. Kind of annoying me. That one too. Okay. So look at this like ink line. It's a gap fill and it's multiple retests lower. It also is the high from 2020, which again, once it like cleared it the third time, it was gone. And I mean, you could technically, if you want, well, let's just technically, if you want, you could draw it all the way. You could make it that big and still you'll go, man, that's a million miles wide. Well, how about this? This is how you think of it. When the market starts tanking and it gets into this range, you start thinking about taking profits on your shorts. Maybe that's all you really need. All you need is love. Yeah, I mean, look at this. I mean, if it got back down to here, if it got, say, to 300. Now, again, this is the hardest thing about, you know, I love when people try to go, hey, what's your price target? Hey, guess what? I really don't have one. Because what are the things that are really difficult to know? What's the bottom? Like, who's going to be the most irrational big institution that blows the S&P down? I don't know where they're going to blow out at. I have no clue. But guess what? The more this thing drops at some point, the less you just have to own. It's just that simple. You're going to get really caught up in price targets. And, you know, one of our good friends in the Discord room, again, talking about today, is like, hey, I'm looking to sell some stuff on Pops. And I was waiting for this price. And it's like, oh, that price never happened. And I feel bad for people because, again, I mean, we're all smart here. We all think we know what the market's going to do. Where are the price targets up? I don't know. I just don't know. I mean, we talked about the Qs again, why this is a bear market. Look at this son of a biscuit. It goes from 20 up to, what was the actual low? 25. Up to 410 approximately. Nice smooth channel. Breakaway, blowout. Under the 20 month. We said this is the first time you've closed significantly under the 20 month, the whole bull trend. Look at the volume at the highs. Does this look like distribution? Again, people are going to argue with me this is a bull market and that the time to buy and yada yada. No, because you don't remember the past. When the tech bubble not bounced, when it popped, I mean, the Qs went from 122 down to the 20s. You do the math. That's right, it did get down to like, what, 19 something? Anyway, doesn't matter. I can't remember the exact price. That was so many years ago. But look at what, that was a major correction. If you don't think tech can get absolutely smushed, again, because I hear this premise all the time, tech's the future, tech's the future. No, stocks are cyclical. Leaders change, leading changes, money flows. It doesn't always go to one sector. No one's saying AMD is going out of business. No one's saying Apple's going out of business. No one's saying Google's going out of business. What I'm trying to explain to you is that they just won't lead. The valuations will go will get pushed back to, you know, whatever crazy metric to the downside was the opposite of the upside. Because remember when we were trying to value some of these companies, you're like, oh, PE ratios don't matter. Well, at the lows, they're going to get so cheap that PE ratios won't matter again, but they'll trade at 1, 2, 3 times earnings. All right, IWM. Here's what we gave out. Perfect analysis. It said 50-day to the 188 area. If you shorted that, again, hey, Dan, you're wrong on oil. Yeah, but you know what? We're giving you some other good stuff to fish on and get a hold of. And again, I'm going to toot my horn because so many people trolling today. And that really just, I wouldn't say it bothers me. I'm like, hey, watch the videos and watch all the other stuff we hopefully helped you out with or helped you sidestep. IWM, here we go. 50-day down. Now where? Everyone asked that question because it's the weekend. Channel lows, maybe a channel blowouts. 200-day, I mean, 115, that is not out of the woodwork. I mean, look at the 618. Let me draw it for you guys in case you're missing it. And when I say guys, gals, friends, being from the South, we kind of say generic terms like Coke for every drink when it's not all Coke. So look at this, 115, 112, 113. Should it bounce here? Probably. Should it bounce at the 100-day? 100 month? Probably. We'll see. This is a bear market. Hopefully you understand that. You're getting the, people who watch this constantly, I think they see like, yeah, no wonder the market got crushed today. No wonder the market's getting crushed. let's get into gold, because a lot of people, again, I'm like, watch the 174. I put out a post on Twitter. I said I'd be watching the 174s to take profits on. Everyone go, ooh, Dan, look at the volume. Finally. But here's the problem. And if you can't recognize this, that's fine. Let me explain it to you. On a day like today, when the news is going, CPI is at 9%, whatever, inflation, all-time highs, yada, yada, yada. Who is buying the news? You ever heard the saying, headlines are for suckers? You keep that in mind. I don't think this is going to sustain. What's the upside? Maybe 175s. And again, here, let's go back in time, because I want you guys to see what happens during bear markets. Keep in mind, 2020, even gold got smushed. Even gold got smushed. I think that was the COVID month. Yeah, like, and then higher. Market liquidated, dropped. It went from 159 down to 137, $200 an ounce, whatever. 2008, market's looking good. You know, market's really shaky. Obviously, the market topped, 2008, 2007. Look what happened. Gold got slammed. Boom. Okay, what do you do? Again, let me pull up. Let me see if I can get this sucker going on TradingView. Again, we're not really worried about volume. I just want to show you guys and gals bear markets and how they've acted. Hopefully you're having a good week. Okay. All right, so here you go. This was interesting action. Come on. It's funny that it's showing volume, and that volume is actually from the currency crisis in Japan. I'm sorry, let me pull this up. Even in 2001, look what happened to gold. 99s, it peaked, and it went nowhere. It dropped. I guess it's crazy to think it only dropped whatever. That's a large percentage either way. Let me pull it, if you can see this. Gold didn't bottom until 2001, and then it chopped. So if you got chasing at 99, I think it was action 337. Not a 250. You do the math. 30% off the highs. That's rather disappointing. Keep in mind, in the 70s, will it show it? Gold just no. It doesn't really matter. And it's hard to like go back in time to all these recessions when TradingView doesn't really show all of it. But keep in mind, look what happened. 2001, gold really didn't get the lift off until it broke the downtrend in 2003. Now a lot of people are going, "Oh, you missed the bottom in gold," and I'm telling you right now, no, we didn't. We absolutely didn't. Because right now you're in the handle of a cup and handle. We all know that. Let's go back to my charts. Let this play out. And I've said it's going to get wiped out because, again, like think about who is buying today. Do you think smart money was buying today? Smart money knew this was coming. Like you have to always keep that in mind. Like smart money, the market makers really kind of always know what's coming because they have their finger on the trigger. But they definitely don't mind selling out to some people on a pop. That's my intuition on this. Because again, look at all the retests. Like you get gold just never V bottoms. So if you're super bullish, set your alarms for the 167. Again, I still think you're going to get in this like 160, maybe 158 range. Here, check out on the monthly. Because here you go. This here, that's what it is, that blue zone. I think it makes sense, not because of anything other than irrationality. And people go, what does that mean? Because the market's going to act irrational at the lows, and it's going to puke everything. And gold is probably the best asset, and it's going to come out the winner in the next bull market probably, and so are some other commodities, and whatever, it doesn't matter ultimately like when, but this will blow out, and it'll blow out, and then it'll go absolutely higher. But again, if you just wait for the blowout or you're patient, I think you're going to find that like shorting oil, shorting all these other names, doing other trades, are going to find yourself winning bigger and better than just buying gold and silver. Because again, here, check out silver. Study the past. All right, here we go. When was the best time to buy? COVID. I mean, now again, look at the COVID blowout. I mean, this thing went from 17 down to 10. That's a huge snap. If you do like 50% just off of the highs from 25, 12 or 13. Now, I'm not saying that necessarily has to go 12 or 13, but let's look at the best times to buy again. Remember, 2008, Could have just waited. You just could have waited. Look at that. You had opportunities to buy. And again, silver went on a monster run, clearly. 8 to the 50 almost range. Do you not think we're going to 100? I mean, I personally do. So maybe it gets to 15, 12. I don't know exactly where, but I'm going to wait for the market to blow out. And so, again, if you come to the room and you ask this question again and again and again, I don't know if I should take it personal. I won't. But I think it's just so kind of annoying that you can't wrap your head around the patience of this. Because, again, that blowout leads to the up. Now people say, "Oh, this is a blowout, Dan." It's like, no, it's not. I mean, I'm friends with a lot of gold and silver folks. They are not capitulating. They're getting more aggressive because they go, "Oh, the Feds are fucked up 1%. They're gonna have to unwind this immediately." And it's like, probably gonna have to unwind this, but also keep in mind, it'll probably be not today, not tomorrow, not next week. So if that's the case, leave this stuff alone. Okay, GDX, we talked about it, failing at the 200-day. Nice rally today, but do you trust it? Do I have to go and do this over again? Yeah, all right, fine. COVID, 31, 16, blast off. 2007, 2008. Look at this. Peaked at 56, dropped all the way to 15, then ran up to 64. I'm not telling you I know for sure what the price is. Because, again, folks were like, "Oh, look, we're at channel low." And it's like, well, yeah, channel low is cool in a market with low volatility. Keep that in mind. Like, channel lows and clean charts work when the VIX is below 20. The VIX being above 20, your charts and your clean action and your hope for clean channels. Wrong. It just doesn't work like that. So if the VIX spikes, where does the GDX go? I don't know. Wouldn't be surprised by a 25 handle. 22. That would be the best place to buy, folks. GDXJ, because we'll wrap through these metals and miners now. Hopefully you're seeing the big story. Nice pop today. Talked about the 618. No, just let it play out. AG, again, another. And again, I'm going to go through all these names that I like because I think these will be names you can obviously buy. What does AG do? I mean, it went from 12 down to 5. It's been going nowhere fast. All right, what happened in 2008, 2009? Oh, guess what? The miners didn't bottom didn't get bottom, but they got smushed. I mean, 6 down to 60 cents. Oh my God. That's a big move. 90% drop. Now, what's 90% of 23? Okay. I think it's down to like the $2 or $3 range. I don't think we'll get down there. Again, wait. I guess that's the story. Wait. AEM. Wait. 46. Where could it get down to? I think in the 20s. Pray it gets to 32. I'm like whispering. I love this stock. Eric Sprott's buying a ton of this stuff. Where do you want it to see it come to? Again, we talk about it holding the 5s, but if the market gets blasted, don't you think you're going to see a 3 handle? If you see a 3 handle on the stock, buy 100 shares for me. And if it doesn't work out, I'll repay you. I mean, literally, that's how confident I am in that. If you can get it at 3. Oh no, pass. Here we go, holding the 21 levels. What are you going to do? What are you going to do with all that fun waiting? Oh, zoom out. No, it's not silly. I mean, I'm trying to be silly, but think about it. Watch this 10, 11 range. That would be sick. These companies are selling at discounted prices. We all know that. All right, are we done with the miners? Let's get in the materials name because this is the next patch of names that I like long-term and inflation. But they got hammered. And again, another stock that we told you, we gave you some winners this year and last year. Talked about the 20-month, talked about this range, buying it. Look what happened. Booyah, 18 to 38. Now, again, we started selling. I started selling some at 35, sold up here. Others waited, and that was even better because they got this crappy, like sloppy top out. Now people are telling me, Dan, you got to buy it. You got to buy it. And I said, watch the 200-day, boom, fail. Now what? Again, leave it alone. Let the market play out because that stock could get murdered. Same thing with VALE. Talked about liking it. Remember Scott, one of good friends in the trading room, said, hey, look at this action down here. Nice trade. Catch a double. Now what? It's going lower. Like, let it come back down. Let it come back down. People are going, oh, but you got to buy it. No, you absolutely don't. Because in a bear market, if it gets real bad, you get busted. Doesn't mean you can't rally later. See that? Let it play out. Pray for this 14 level. Pray, 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 pray. Maybe the channel lows. Maybe it goes a little below the channel. If it does, buy more. I mean, I know that sounds counterintuitive, but people just, if you believe in a stock at a huge discount after when the market's blown out, time to buy. CCJ folks, man, I love uranium folks because they're like gold folks, but they haven't been trading it for 2,000 years like some of us have. Sorry, I make myself laugh at that because that's what I mean. If you've traded gold for any period of time, you feel like long period of time, you feel like it's been 2,000 years. What do you think? I said head and shoulders. I posted that today. Posted it yesterday in the weekend recap. I said, watch this. Because again, you have a shoulder line, the top of the VAP zone. Long term, again, show me all the fundamentals you want, and I'll show you so many stocks that are fundamentally down with great fundamentals. I don't care about your uranium ideas because, again, you probably will be right, but it doesn't mean this thing can't get absolutely shit canned. Keep in mind, we bought it down here in this area in the 19s, sold some up here, sold even higher once we hit the volume at price zone. We hit the 50% fib. Look at this, folks. Support resistance right there. I mean, it went $1 higher. My bad. No. I had some folks saying, oh, you didn't buy this. You missed out on a 20% move. And you know what I say to that? Whatever. It's not making new highs. Like, it doesn't get me that excited out of bed. Like, again, that's why being bullish in a bear market you should not get excited about major upside moves. Again, you can trade them. No one's saying that. But don't get excited like they're somehow going to turn into a bull market and hold them. You got to trade them. Trade the extremes. You could have bought down here. Should have sold up here. I'm not going to say you're welcome, but I'm just going to say you're welcome. Because, again, I don't think this is safe. Arrow. Again, another company, another copper company. Love it. People are like, oh, you missed out on the 20%. Whatever. I don't care. It's going back to the range lows. In a bear, this thing is newer. So I would look at the channel low. Somewhere in the 9s. Mosaic and CF. Here we go. Two more materials names of unrelenting bullishness that have not gone bullish. Interesting. Oh, ag, Dan. Ag. Shortage. Hey, now we're pulling back into the zone that I predicted. Nobody believed it. Now what? I'm unfortunate to say that I don't think it's a buy yet. Because why? I'll say it, and I say it over and over, because the market has not capitulated. I like this name. I like the name, but it doesn't necessarily mean it has to bottom until, again, I just hope people like realizing this, like, things got to play out. Here you go. Maybe the 42 range. CF, another name. Hey. Love the stuff. No. Again, everyone's talking about how bullish the thesis is, and everything is bullish, but it's not going higher. Why? Because the market is the tide, and a rising tide will lift all boats. A lowering tide will bring the water out from the tide, will pull the tide out, and you see who's left naked. No, that's actually a Buffett comment. He said when the tide goes out, you see who's swimming naked. No, when the tide goes out, all stocks drop. Now, again, some will drop less than others. Some will hold up better. Just be safe. AMD. Again, here we go. You're welcome. This guy, I told you, watch this level up here to short. Nicely done. Said also, too, watch the 0.618 in the 100-day. You're welcome, because if you got in the short between 106 and 110, you're loving it. Apple, here's another one if you pay attention and you watch the videos. Said, watch the 150s. Boom. Dropped. 13, 14 points. Again, this is all just stuff we continue to like point out. Facebook, we've said this company is a turd, but it's already taken a monster dump. Keep that in mind. Boom, big gap. Now it's basing, I've said this a billion times, short the extremes. I don't know if we're extreme enough to short, but it's holding up pretty well. There's other names. Just move on to something else. Roblox, I'm sorry. We called the bottom, but what did we say? It's not a bull market. You better take some profits. You got really close. And this is what sucks, is because I know there's a ton of people waiting for the 50-day. We never got it. Now you're back below the 20-day. Keep in mind, I do think there's limited downside. It will get bought out. It's just, will it get back to 23, 22 area? Or go to 18, well, 19, I don't know. Tesla. 3-for-1 stock split. You got to be kidding me, because these stock splits are the death of the stock, because once you create more inventory by splitting the stock, you make it less rare. I mean, there's a reason why Buffett does not stop, will never split his stock. He knows by creating more liquidity, by creating more stock, even though it's just a split, you're technically just splitting things up. You do have more supply. You know, think about it. If you have 100 bricks and you cut them into 2, now you have 200 bricks technically, even though they're half bricks. Now there's more supply and it trades at different pricing, but it is inventory. So what does that mean? I don't know. Let me pull up Cisco, because they were the culprit of many stock splits at the highs. Look at this. Oh, we got to split. 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 Bam. No, you don't split. You let your shit run. Apple's done some splits, but I don't. You got to be stupid. I don't know. And again, all right, so it's going to pop. What's the obvious trade here? Short the split. Now, again, I don't know what date it's announced for. Whatever. It doesn't matter. Let the split come. Let it run up. Then short the crap out of it. All right. That's all you really need to know. Now what? EXPI. Let's talk about fundamentals. Companies that kill it and doing well. Oh, but fundamentals, this for uranium, fundamentals, that for oil, fundamentals, this for your everyday trade that's going higher. Look at this, 89 to 90 down to 13. Oh, but fundamentals, this company, I mean, I work for them. We're literally murdering everyone in our field with competition. I mean, I just don't know how else to say this, is that fundamentals don't matter. I like the stock, but the fundamentals don't matter. I like it cheap. Here you go. Here's another win for you. Talked about this double bottom, volume price analysis. We said the stock was holding up extremely well as the market was getting murdered. Then what happens? FDA news. And what did we say? The more you're up, the less you own. Take profits, hedge, sell covered calls, or take your profit and buy long dated calls and really limit your risk to whatever you want it to be. Some people high-fived me. Some others are like, oh, you're an idiot. It's going higher. And you know what? I don't care. I mean, when it goes from 155 up to 236, it probably could go higher just as easily go lower. So now your odds are not really benefiting anyone other than the market maker, because it's going to go lower. It's going to shake you out. If it goes higher, will it in a bear market? Again, because it needs to get bought out. That's the key, like for it to sustain higher highs. Either way. Let me say this again. It's very clear. When a stock like this runs up high after a big move, it's no different than shorting oil. Like it's going to pull back some. I don't know how much. Look at the first support at 217 to 215, 212. I don't know. Let's get into oil, because this is where it gets real fun. USO. Everyone's so bullish. What did we say? We said this is the liquidity blowout. And again, it's always funny to see how the news articles are so bullish at the highs, which that's what the market maker does. We talk about this. But you couldn't find a single oil bull down here. And it reverse split and the oil's dead. Gone. Well, what does oil do in bear markets? It runs up and then it gets murdered. And when I say murdered, slammed. What do you do next with oil? Now, again, I will warn folks, and I've said this a bazillion times. Now, again, it's really hard to short, based off this stock, because again, it's a crappy ETF that goes lower, hence why we're shorting it. But again, nice smooth channel, blowout, little higher high, I guess. Now, again, keep in mind the futures high is 130. We did not take that out. We couldn't even get to 125. Now what? And we talked about the anomalies. We said the first of the month, interesting action, end of the month, clearly selling. And then you went up on poo-poo volume. Now what? Doji. What does that tell me going into OPEX? Well, at this point, going into OPEX, it says two things. You could retest, or this could be like the April OPEX for, say, metals, which ended up turning into the top. If I remember right, let's pull that up for GLD. Someone was talking about that, and I'm trying to remember. Yes. This was the top for metals. And it was actually an end of the month kind of playing out. again, our expiration for next week, but FOMC, a lot of stuff going on. Point being is oil, I'm like, it's getting stuck back on gold brain. Is oil peaking before OPEX? Oh, man, this is a hard trade. But what do? We know about previous tops. Oh, look at that. June, July. Huh. June, July. Hopefully you're seeing a little pattern here. May. Weakness in oil typically follows Memorial Day. It's the peak of driving demand. And if oil prices stay higher, demand drops even more. So this is why I think this trade is so hard for you to wrap their head around, because at the lows, you couldn't find a bear, right? A bull. Every article was bearish. Now we're back at the highs, and you can't find a single bear. Every article is bullish. Something is not right. Because again, when the market makers want to mark something up for the long term to continue going higher off a bottom, they're very quiet. Shh. You don't hear anything. You literally hear nothing. But when you see super bullishness at highs, think of Tesla. Think of Tesla. You know, you couldn't find a Tesla bear because they all got blown out, right? Broke the nice smooth channel up. Let me zoom into it. Because again, we were the only ones. I mean, I still remember in November. Like, hey, man, I think this is blowing out. No, Dan, you're an idiot. Bye, 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 bye. No, more like bye-bye. So, I mean, that's the kind of similar thinking. And now here you wrap this on top of this. USO, bear market. Oil, bear market. Uh-oh. Is it topping? Well, what else do we look at when we look at some of the other things? Natural gas. Is natural gas topping? That looks like a top. Look at the volume, holding the 20-day. I think that's a top. Let's go look at XOP. Oh boy, we talked about this candle being a red flag, but that doesn't necessarily mean the bottom. Just like you'll see red flags at the bottom before something bottoms and goes higher, it won't be one day bottoms. Went a little higher. Now again, you zoom out on the monthly, you go, what in the tar nations is going on? Started kind of thinking about it and was like looking at some of the levels and going, huh, where does this market find the most resistance? Right in here. Right in here, right in here, right in here. If you don't think the sellers are going to show up in a bear market, I'll show you again. 2008. Look at this thing did. 291 down to 94. All you need is one big red candle to get even on drip. I hope people realize that. Like, it's not going to take a lot for oil, like, for this to drop, because I think what people will realize is, let me see if the drip is even. Can you even see it? All right, here's May 2020. And look at that thing go. Look at the percentages. I mean, this thing, God, it's crazy to think about it. It went from 440 to 5,000. Now, again, I'm not saying we're going to 5,000, but is it possible this thing gets to 30 safely? Yeah. Could it get to 40 safely? Could it get to 50? You're like, oh, you're an idiot. Okay, okay, whatever you say. Well, one of the things I always know about ETFs, they reverse split near the lows. Oh, give me an example. Give me an example, Dan. Okay, I'll give you an example. Can you see it? XOP. It's hiding in there. Reverse split at the lows. Give me another example. You're just pulling that out of your behind. Okay. Again, ETFs that are leveraged to commodities, reverse split at lows. Ah, crap. 1 for 8 on the USO. Sorry about that. What else would you like to see? Man, let me pull up. Let's even pull up Nugget, because I imagine there's a reverse split at some low on this thing. Dude. Oh, look at that. Look at that. Huh. A 5 for 1er. The low. Dan, you're just, God, dude, you don't know what you're talking about, man. Okay, another low. Maybe it didn't take off from it, whatever. Well, here's a split at the high. Huh, not a surprise. Remember, the opposite split, 5 for 1, like a bullish split. Oh, 1 for 10 at the lows. Not a little early, but did go higher. Hopefully you're seeing something. Oh gosh. Hopefully you're seeing why I'm liking the drip action. Now people are going to, again, it's relentless. Like people are just like, you're wrong once. They focus on it. And I'm like, okay, whatever, man. 10 for 1. 10 for 1 reverse split. You know what's coming. You know what's coming. Oh, let's pull up an, oh, where is good old KOL? Because I'm KOLD. Let's pull up some more of these because I want to cement this in your brain. Reverse splits at lows. Here's a reverse split. 1 for 4. Let's see if there's any ones. Clearly that one didn't work out, but I don't know what's going on in natural gas. I don't pay attention to it all the time. Let's see if we have any more reverse splits at extremes. 3 for 1. That was a bullish one. That's as interesting. Again, I'm just pulling up stuff as I go through. Let's see. All right, here you go. 1 for 1, 1 for 4 at the low. It went from 413 up to 800. Not a bad little double. Reverse split. Oh, you know who's the king of this? Sorry again if you're like, dude, get to your point. No, I'm gonna beat this point down. UVXY typically splits before it pops. Here, not really. I guess it. Oops. I remember this thing splitting before. Here we go. All right. Yep. Here's one. Right down here. I mean, you couldn't get. I mean, before it tripled. Nice pop. This thing has just been beaten so many times. Here you go. Reverse split before it. What did it do? Doubled. This thing always gets beaten down. Hopefully you're seeing that. Like these can be very obvious reversal points. 1 for 5. Let's see. Yeah. Hopefully you're getting the point either way. Typically, here's a 1 for 5. Went a little lower. Boom. Sorry to beat the dead horse, but that's typically what happens. Now, at this point, let's pull up a few more names. ExxonMobil. I'm sorry I beat a dead horse. ExxonMobil. What did we talk about the last couple days? CNBC is literally doing a special on ExxonMobil as like the future of oil. I mean, I can't literally call a better top than them. Literally. I mean, you can't believe this kind of crap that they would run that. They're not running it down here on the W pattern bottom. Nope, they're running at the highs. Tesla, the future of cars. Specials. Remember those? Tesla, the future of everything. Tesla, Elon Musk, this. But here we go. Talked about this anomaly. You went higher. Now you're backing off with volume. People go, well, what happened in a bear market, Dan? Well, yeah. This thing went from 95 down to, pretty quickly down to 56. Well, I mean, you're going to be rather impressed when the narratives all of a sudden change when oil starts tanking, because people are going to they always love to put a new narrative on it. And they're going to say, the future is electric. We don't need oil. This is a huge move, y'all. 29 up to 105. It's going to pull back. And how deep? Do the math. I would think you can see very clearly. Channel lows somewhere in the 80s. I mean, I've said this on the monthly. I'd love to see a back test of this 65 to 70 range. I think that makes a lot of sense. We'll see. Now again, nat gas, we talked about that being a top. Since it's the weekend, we can get into XLE. What do we talk about? Some of the red flags recently. Said that was ominous. You had this doji, now 3 days down. Keep in mind, these moves have gone stupid parabolic. 45 up to 95. PXD, we talked about this one, riding the channel highs dangerously. Now you're breaking the 20-day. You said this was an anomaly here. Major anomaly. Nice little dividend payout. Then fail. Let me go through Valero and CVX, Chevron. Talked about this, oil. I mean, Valero trading at like a 27 multiple, which is insane because this company has a profit margin of 2%. Maybe it's 4% now. Woohoo! Now what? Blows out of the channel, coming back down. I mean, pull up the monthly. What happened in 2008? Down. 71 to 14. What happened in 2018? I mean, it just went to 128 down to 30. Don't get it twisted, because again, here you are up at the channel highs. I mean, we talked about this. Talked about this. No one listens, man. Look at that perfection. Sometimes it is that simple. Chevron said, look at this anomaly. Something's wrong up here. Boom. Now you're break the 20-day. This is all, look at this. I mean, chop, chop, chop. Makes a new high. And failing, that's a bear trap or bull trap at the highs. Now again, you zoom out in the monthly. What could do during a bear market? 104 down to 52. 2020 went from down to 127 down to 51. I hope this is enough evidence to make you realize why. Again, people think I'm just arrogant, and when you study this past and you know like the probabilities, why would you not be aggressive and aggressively confident? If you have a legitimate idea, stick to it. And again, we talked about HYG. Here's another one: corporate debt in a bear market. Look at this thing. God, it's so ugly. Let me pull up a monthly because maybe you'll see it better. 2008, this thing went from 106 down to 61. It's dropping. What do we say? HYG in bear markets, right? Look at this. It's going lower. Corporate debt. Corporate debt becomes majorly discouraging to investors because, again, what could happen in a recession? Companies go out of business. So why would you want to own corporate debt and lose a ton of money? Anyway, hopefully you have a great week. Have a great weekend. Hit me up if you got any questions. Please be safe out there. Trust that, we're trying to feed the best information possible. We can be wrong. Have stops. Be safe.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.